Mhm. Good afternoon, everybody. Welcome. Welcome. Thank you for taking the time to join in. We will start in about 5 minutes. Good afternoon, ladies and gentlemen. Once again, welcome. We'll be starting at exactly 10 minutes past 3, just to make sure we give everyone time to join in. Thank you very much, and once again, welcome.
Okay. For the beginning, subsequent will not block the ground. Well done. Yes. Oh, there's not 50 directly. Hmm? Which letter? Hmm?
Okay, good afternoon, ladies and gentlemen. Thank you for taking the time to join in. So today, first of all, we want to say again, thank you for taking part of this session. It's going to be an enlightening session on insurance and financial planning, a key to wealth creation, organized by Cordros Capital, via Cordros Insurance Brokers. My name is Kate Ibinum. I am your moderator for this virtual event. And I'm thrilled to guide you through a discussion that holds the potential to actually reshape your financial future. Our focus today is not just theoretical, it's about practical steps you can take to ensure your financial well-being. Some house rules, please, once you join in, make sure you are muted. If you have any questions during the session, just put them in the comment section and we will take it from there. That being said, we are really honored to have a distinguished expert today. He's our keynote speaker, Mr. Oyelere Oluwaseun. He's the team lead of financial institutions and direct corporate strategic business unit at Linkage Assurance. Now, his expertise promises like so many insights and valuable nuggets that can empower you to make informed decisions on your financial journey. So, okay, can everyone confirm they can hear me because it seems the network is a little.
Yeah, it's a little bit fun.
It's a little.
Yeah, network is going and coming.
It's a little bit what?
I can hear you from here.
Yeah, we can hear you.
Okay.
Okay. Thank you very much. So, as we're going to be talking about wealth creation and how insurance relates to that. First of all, let's just give you a brief introduction to who we are as a group. the Codra Securities Limited, which is a stock exchange, and the Security Exchange Commission. We have, of course, Asset Management Limited, which offers wealth management and collective investment schemes, with a current AUM in excess of, provides financial solutions and intelligent advisory service on a wide range of mergers and acquisition transactions. And we have Coders Registrars, which is licensed as well by the Securities and Exchange Commission and registered with the Institute of Capital Market Registrars. We have Coders Trustees Limited as well, which provides educational trust, estate planning, as well as corporate and public trust services. Now, we've been in business for 16 years plus now. We've served over 1,000 clients. We are based in 7 strategic locations across the country. What has kept us so far is our growth philosophy. We're driven by trust. We have a team of empowered people, and the ultimate goal as a company is to ensure for all our clients. Okay, so we're going to just
Wow.
Okay, apologies. Apparently, I got tossed out of the Zoom meeting, unfortunately. I'm not sure what exactly happened. So I will just give a brief overview again of the services that we offer. Let me just quickly check the comments to make sure that's okay. 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 Can't hear anything. Please, I'm not hearing. Oh, I apologize. For some reason, I got tossed out of the Zoom meeting. I'm not sure how or why that happened, but now I'm back, and so let's do this. We were talking about the seminar, what we expect to happen. Now, we have so many incidences of unfortunate occurrences that happen to people. And the goal of this seminar is to ensure that even though we know that we cannot completely say bad things will not happen, but the goal is for us to in the event of a loss and to find a way to build wealth whilst doing that. I was going to briefly introduce our keynote speaker. I hope everyone can hear me so far.
Yeah, for now I can hear you from my side.
Yes, I can also hear you from my side.
Thank you very much. I apologize for the breaking transmission. Okay, so this seminar is not just a conversation. We hope that you ask questions, and we're going on a journey towards financial resilience and wealth creation. I am going to introduce our keynote speaker at this point. His name is Mr. Oyelere Oluwaseun. He is the winner of the Maiden AIO YIPS Africa Next Gen Insurance Award for 2002. It is an excellence award in recognition of his contributions to the development of insurance in Africa. He is a manager and team lead of financial institutions and direct corporate SBU at Linkage Assurance PLC. He is highly skilled and proficient in general insurance underwriting, technical analysis and strategies, business process development, and management. He is currently the country director of the African Association of Young Insurance Professionals, YIPS Africa in Nigeria. He is the chairman of the Accidents Offices Committee of the Nigerian Insurance Association and a member of the Advisory Committee on Fire and Accident Insurances for the same association. He is a member of the Chartered Insurance Institute of Nigeria. He was a member of the Electoral Committee for the year 2023 Governing Council election and serves as a member of the Mandatory Continuing Professional Development Committee and the IT Steering Subcommittee of CIIM. He's a graduate member of the Nigerian Institute of Management, a member of the Nigerian Actuarial Society, and a student member of the Certified Actuarial Analyst Global. He holds a Master in Business in Finance from the University of Lagos, a bachelor's degree in economics from Joseph Ayobabalo University in Osun State, a HND in insurance from Lagos State Polytechnic, Ikorodu, and a national diploma in insurance from the Polytechnic of Ibadan in Oyo State. He recently earned a credit qualification from the Young Insurance Professional Program in partnership with the London School of Insurance. He is passionate about the development and sustainability of insurance practice in Nigeria and Africa. He expresses unflinching support for academic and professional excellence, and he is a testament to these unique identities and the noble awards that he's sharing in the comments. Yeah.
Yes, Kate, can you hear me?
Yes, I can.
Thank you very much.
Thank you very much for taking the time to do this.
It's fine. You understand, network can be very frustrating. I'm happy to be here.
Mm.
Thanks for the opportunity, the privilege to take on this session and this topic. Let me just put on my video so I'm sure everyone can see me. Okay, all right. So I hope my video is much okay. Please confirm you can hear my voice, Kate.
Yes,
Yes, we
please.
can hear you. Nkit.
I'm
All
okay
right.
from here.
All right. Thank you very much. It's a great privilege to be here, to be given the opportunity to present this topic. It's something that we are familiar with. Good enough, it's something that, of course, we are currently in need of, especially at this time where the environment is not so friendly. So we hope that things get better. Sorry, Kate, I need to put up my slide, so you need to give me permission to do so. Thank you very much. All right, so I'm happy to be presenting this topic to us. I would like to confirm, Kate, if my slide is up, if we can all see my slide.
Yes,
Yes,
please,
they're
from
up.
my end.
I'm
Oh.
good, yeah.
All right, thank you very much. All right, so thank you very much once again. It's wonderful to be here. Though our time is a bit fast spent, so you permit me to, as much as possible, manage the time that we have. And as much as possible, I'll try to make the session more interesting and participatory. Just like Kate mentioned, I wouldn't want to be the only one speaking, so I would like to have our contributions whenever we are called upon to do so. Again, for certain aspect of the presentation, I would ask us to provide our comments, some answers to certain questions, which I would have to provide by responding on the chat section. So again, feel free to ask questions. That will also help us to confirm that we actually understand the concept that we're looking at today. Insurance and financial planning, your key to wealth creation. Like I said, this is a topic that it's very important, especially at this time where the economy is not so fine, and then where we have expectations as individuals, as business owners, as corporate entity. There are goals that we have set for ourselves. There are resources that we intend to acquire to help ourselves to cope with the changing, challenging environment that we find ourselves. And so it's important that we look at the topic we have today and take as much note as we can, learn as much as we can so that we can navigate the challenging times that we find ourselves. Again, just brief ground rules that we keep our phones a bit away so that we can concentrate. We make some notes as much as possible. Let's avoid distractions so that we can fully participate. And then let's focus on the topical issue that we have to discuss. Again, let's ask questions whenever we feel we have questions, most likely intermittently within the session and at the end of the session. And let's also listen attentively. Now, for today's session, we'll be looking at, I'll try to see as much as possible we can know and refresh our knowledge of the concept of wealth, which I know is not new to us. I believe that we know what wealth is. I know some of us will be able to explain what wealth is all about. But then maybe some might have forgotten or might have some misconceptions, and then we need to put these things in the right perspective. again, we need to understand what wealth creation is about. How does financial planning relate to wealth creation? And then what benefits insurance has when it comes to wealth creation. And so in summary, we'll be looking at 4 major modules in this session. The concept of wealth, what wealth means. Then what is wealth creation? What is financial planning and its relationship with wealth creation? Then what is insurance and how it also relates to wealth creation? So quickly, I'll take on the first part of the session today, which is the concept of wealth. But before we go on, let's just take a quick puzzle. Let me just see to what extent we actually understand these two concepts. Being wealthy and being rich. I know these are two words that we are very familiar with. In just about a minute, can we give an idea? Can we briefly explain what wealth means to us? What being rich means to us? I would like to see our responses in the chat section. Just quickly, what do you understand by being wealthy? And then what you understand by being rich? Just in a quick 1 minute or less. So I'm waiting to see our response. I'm here to see our responses. What do we understand by being wealthy and being rich? These are two words that we often use at different times, sometimes interchangeably in certain situations. But do they really mean the same thing? Are they essentially synonymous? Do we have some differences? Would it be right to say I want to be rich, or would it be wrong to say I want to be wealthy? Kate, I don't know if you could see any response from anyone.
No, I actually can't see anyone. Hold on. Rich means high amounts of material possessions. This is from Joy Ojakobo.
Okay, thank you, Joy.
Wealth is having all the things, including money. Why being rich is just about having money.
Thank you, Lusayo. Thank you, Joy. Do you have any other person, any other comments?
Being wealthy is always able to pick my bills no matter the period of my life.
Oh, that's a very nice one. Okay. From the responses that we have so far, yes, we're actually right on point. It's very nice that to a larger extent I could see much better appreciation of what the two concepts mean. Now, of the truth, yes, being wealthy and being rich are not actually the same thing. You know, they actually mean two different things. Although one is a subset of the other. When you look at someone that is rich, you expect that rich people or people who refer to themselves as being rich would often spend above their means. Why? You see them borrowing almost all the time because their wealth is their resources are confined to money, to cash deposit, to the accumulation of just funds in their accounts. And so you see that most of the times people who are rich would be most times flamboyant. They want to actually show off what they have. They want to really show you that they have so much more than other people. And so you see that they put their resources in assets that do not have long-term value. But when you look at the wealthy people, just like someone said, to be wealthy means I want to have resources that outlives me, that would, last till lifetime. That is the mindset of a wealthy person. So they usually build on long-term wealth. They get assets that have appreciable values. And you see that they don't spend everything that they earn. They have the mind to actually reserve a lot more for the future that they face. You see them goal-driven. They have something they want to achieve in years to come. And so their investment mindset, their savings mindset is actually at the top. So this is the difference between richer people and the wealthier people. Then what then is wealth? What is wealth? Now, it's not far from what we have all said. Wealth is the total value of asset that you own, everything that you have, either as a person, either as a community, either as a country. Nigeria is actually wealthy, yes, because we have a lot. But then the question we have is, we ask ourselves is, what is the application of the wealth that we have as a country? But that is not the focus of our discussion today. But the fact remains that being wealthy speaks to talking about the totality of what you have, the resources that you have. And when we say resources that you have, wealth is not just money. Wealth includes the assets that you have. Money inclusive the cash that you have. Health also is part of wealth. The property you have, they are part of your wealth. Your possession are part of your wealth. So wealth is more all-encompassing. It is not just limited to the cash that you have, the worth of your bank accounts, your savings account, how heavy it is, because again, something can happen to the liquid cash that you have. Most of the times, the liquid cash that we have are most of the time able to take care of short-term goals. But being wealthy means being able to take care of your long-term goals, looking at the future and being able to prepare for that future that you're looking at. Again, but then when it comes to concept of wealth, what do we say? According to James Altucher, he says investing is for wealth preservation, not wealth creation. Do we agree? Is this statement correct? That when you invest, it is only for wealth preservation? Can we answer yes or no? Investing is for wealth preservation, not wealth creation. Is that correct? Do we agree with his notion? Do we think he's actually right? Is he actually right? No.
I think it should be for both.
I think it should be for both. Thank you very much for speaking to that. I think it should be for both. Someone said no, and someone said yes. Right? Now this has to be put in context. He's actually right. And the person that said it's actually for both is also right. Because when you invest, your investment can be for two purposes. Either you are investing because you now want to create a wealth. You now want to establish that you want to start building up wealth. So for instance, if you decide to invest in shares, if you decide to invest in mutual funds, that for the first time doing that, it's about you trying to create wealth. But again, you could have had mutual funds, you could have had all the cash deposits in your account, you could have had houses, but you still want to increase the number of houses that you have. You still want to increase how much you have in your mutual funds. In fact, you might want to diversify your funds from the naira to the dollar to whatever currency. You may want to increase the nest of your investment portfolio. So investing in some sort is not just for wealth creation, but it also helps you to preserve wealth. But then, from James's perspective, he's actually speaking to the protection of wealth. He is a wealth protection theorist, and so he is allowed by his own perspective to wealth creation to say, actually, investing is for wealth preservation and not necessarily for you to create wealth. Of course, that conception has been challenged by different authors and theorists as well. But then the fact remains that investing is important in wealth creation as well as in preserving your wealth. And then again, you now want to ask yourself, what do we say? According to John Henry, he says the real measure of our wealth is how much we will be worth if we lost all our money. The real measure of our wealth is how much we will be worth if we lost all our money. What is John Henry trying to say here? He's saying that, see, your wealth is not actually measured by the money that you have. Your wealth is measured by what you'll be worth if money is taken out. So when you take out the money that you have, what is left? What do you have left? Who are you? In what bucket are we going to place you in social status, right? When money is taken out of what you have. So money in its real self is not wealth. It's just a means to creating wealth. So if all that you have, the recognition you have is limited to the money you have, then you are not wealthy, you are just rich. So the focus of our discussion today is then wealth creation, and how then we can actually use financial planning, how then we can see insurance as key to creating wealth. So what is wealth creation? We have all said it. We have mentioned it as we started. Wealth creation is a continuous process. So it is not something you do today and you forget about it. Wealth creation is not something that you started yesterday and then you forget about doing something more about what you started yesterday. So wealth creation is a journey that starts with a step, and then you have to have an habit to continue to do it so that you can achieve what you set your mind at. So wealth creation is a process of investing your saved money to grow your wealth by choosing investments. By choosing investment, the word investment, that means by choosing resources that help you to actually grow the wealth or create the wealth. So, but what investment are you looking at? The investment that align with your financial goals, which means that in wealth creation, there must be a goal. There must be something you set your mind at achieving. There must be something that you want to actually achieve in the nearest future, and then you now begin to save and invest the monies that you earn towards achieving that goal. That is wealth creation. Now, but then wealth creation begins with you building wealth, right? It begins with, you have to start building your wealth. You have to take a first step. And to build your wealth means that you need to start making financial plans. And that is how critical financial planning is to wealth creation. Now, what are the benefits of wealth creation? Why do you have to create wealth? Why should you think about creating wealth if you have not started to do so? Right? Now, as been said by Warren Buffett, if you don't find a way to make money while you sleep, you will have to work till you die. That is the essentiality of wealth creation. If you don't find a way to make money while you sleep, if you don't think about how you grow your wealth while you are still at the early phase of your life, then you will have to work till you die. It means that you will have to labor when you are supposed to be resting. So the earliest time to think about wealth creation is now that we have the time to do it. Regardless of what the economy looks like, regardless of how the economy keeps biting us, we need to keep thinking about what? How to create wealth, how to make wealth, how to build our wealth. Otherwise, the economy, we are hoping it gets better, might not get better. And at the end of the day, we are unable to cope with the challenges ahead. So to cope with the challenges ahead means that we have to be ready. We have to have this attitude of wealth creation. So wealth creation helps us to provide money to meet future goals, for things that we are set to achieve in the future, what the plans that you set for ourselves in the future. Then wealth creation also helps us to be able to create a steady stream of inflow. To create a steady stream of inflow when we retire. So for those of us who are working, for those of us who have our businesses, there's going to come a time that we cannot do all we are doing now. There's going to come a time where we say we want to relax, we want to sit back and let our resources work for us. There's going to come a time where we say we cannot work again. We want to, leave things for others to do. Now, at that point in time, we need something to come in as income. Wealth creation helps to be able to create something for yourself even after retirement, right? And then that is what wealth creation does for you, right? Now, in wealth creation, quickly, what are the 4 pillars, the stance upon which wealth creation relies? Now, there are 4 pillars of wealth creation. The first one is acquire wealth. The second is protect your wealth. The third is growth. You need to grow wealth. And the last is passing your wealth along. Those are the stages. First is you need to acquire wealth. You need to acquire wealth. Acquiring wealth means you need to actually, think about what investment you are going to put money in. You need to think about what you actually want to achieve in the nearest future, and then setting aside funds, resources to meet that future goal. That is acquiring wealth. And that is where your financial planning comes in. The second pillar is to protect your wealth. It is not enough to acquire wealth today. If you don't protect your wealth, 10 naira yesterday is almost 50 kobo today. In fact, if you have 1 million naira yesterday, as at 31st of December, right? Your 1 million naira divided by 900 tells you the value of your 1 million naira in dollars. In today's business, divide the same 1 million naira by 1,600. It tells you the worth of your 1 million naira in dollars in today. So you need to keep protecting your wealth. Otherwise, the wealth you think you have acquired 10 years ago can no longer sustain. So for sustainability of the future goals, sustainability of human existence, sustainability of businesses, sustainability of families, we need to think about how to protect our wealth. And a key instrument in this is insurance. Apart from the fact that you need to diversify your investments, you need to think about how to, increase the nest of your investment, of your source of income. These are ways to protect your wealth, but this is where insurance comes in. So the first 2 phases of the pillar speaks to financial planning and then insurance, which are what we call the key to wealth creation. The third phase is growing your wealth. You need to grow your wealth. Growing your wealth is you staying informed, managing your investment portfolio, speaking to consultants to help you manage your portfolio, and then ensuring that the economic trends don't sweep you off your feet. The last one is passing your wealth along. Of course, the mindset of wealthy people is to have resources that outlive them, to have resources that they can hand over to their beneficiaries, their families, their sons, their daughters, to people who are coming behind them in succession in business, right? So businesses also pass on wealth by having succession plans that business outlive the owner, outlive the promoters, right? These are the 4 pillars of investment wealth creation. Now, we are now going to be looking at the major focus of our session today, the key instruments in wealth creation, which comes from the first 2 pillars, financial planning and insurance. But first, let's look at financial planning. What is financial planning? How is it important to wealth creation? Why should I even plan financially, right? Financial planning, of course, is a process because it's not something you do just once and for all. It takes steps, it takes stages. So financial planning is a process of you looking at where you are today. What is your current financial stand today? Where do you belong in this financial space today? And then looking at the future that you have for yourself, how do you think the current state can help you achieve your future goals? That is what financial planning looks at. So it looks at the present, it looks at the future, and it sets in motion, the process, the steps, the activities that you must undertake towards helping you achieve your future goals. That is financial planning. And so your financial plan is a roadmap to how you intend to grow your wealth, your resources, move from the current financial situation to that financial position that helps you achieve future goals, right? And every business, individuals must, consider financial planning as critical to everything we do in order to achieve our future our goals. And that comes with looking at your finances, looking at your investment activities, even looking at the taxes that you pay. Because again, as our investment grows, our taxes grow alongside. But there are ways that you can actually reduce your tax by thinking more creatively about certain investment activities that help you do so. Again, there are certain activities you engage in that helps you get some kind of tax relief, tax exemptions. And so what are the things that you need to do? These are the things that financial planning does for you. It also helps you to be able to look at your savings. Are they adequate enough? How much do I need to be saving to meet up my future goals? Retirement, again, is part of the things that financial planning will do for you. It will look into that retirement to say to you, hey, you have 5 years to retire. And this is the kind of life you want to live at retirement. Or maybe after you retire, you want to go to the Bahamas to have some nice time. How do you save for that? How do you plan towards that? Right? Oh, after retirement, you want to retire in one island, in the Caribbean, in wherever. You need to save towards all of these things. These are the things that financial planning does for you. The activities you engage in looking at how you are going to leave property for your estate, your dependents, your children, is financial planning inclusive. Insurance as well. Your decision to insure yourself, to insure your assets, to insure your business also comes with financial planning. Because again, you have to look at how much do I have to insure? What exactly should I insure? How much premium do I have to pay? What kind of insurance should I buy? What kind of insurance will meet my long-term goals? Do I need to buy insurance for 5 years, a life insurance for 10 years? What kind of insurance should I buy? Do I need an annuity insurance, Do I need a personal pension plan? These are things that you can do for yourself with financial planning in place. And this is help you to create wealth. It helps you to have the nest of resources that can outlive you, that can help you live comfortably, help your business thrive, help your people, to enjoy the benefits of being in business with you, help your partners to have this confidence in the business that it's not a business that will die before them or die immediately after them. And so this is what financial planning does for you. And so it is critical in financial planning that we consider where we are and where we are going to. Now, what are the types of financial planning activities? You have investment planning. Okay, sometimes you have to plan your investments. You also have to plan your insurance. I mentioned earlier what kind of insurance you want to have. You need to also plan your taxes. How do I take care of the burden of taxes as my investment grows? As you begin to increase the nest of, your wealth, as you begin to increase the portfolio of your investments, as you begin to think about how to have more returns on your investments, you also need to be thinking about how you can efficiently deal with tax burden that comes with all of these activities. Real estate planning is also critical. Of course, if you're going to be looking at investing in property, real estate property, you also need to plan. For how long do you need to save to acquire the kind of property that you want? Even when you have acquired the property today, for how long do you need to plan paying for the property such that it does not become a burden for your beneficiaries, for your family, if eventually, God forbid, life moves on. And then again, by the time you retire, what of if you've not finished paying for the property? How do you sustain, repayment of the facility or the mortgage you've gotten, and then to be able to repay your debt? Then the children's future, don't forget, again, you need to plan around the future of your children. Because at the end of the day, when you have acquired all these resources, you need to hand them over to some people to somebody. And that is why you need to also think about children's planning. Retirement planning is also critical, and cash flow planning. You need to think about the streams of income. How much streams of income you need to open up for yourself to be able to meet up with your future goals financially, how you intend to meet up with that future goal. So the steps that you need to undertake in order to ensure that you fulfill all of these types of financial planning effectively, you need to assess your current financial situation. Where are you right now? Then you create a budget for yourself. Where are you right now? Where do you want to be? Set a budget for yourself. How much do I need to be saving every time? What kind of investments do I need to put my money in? What resources do I need to acquire? What kind of asset do I need to acquire? Then you have to set your financial goals. How much I need, right? How much I need to actually attain this level of wealth that I'm desiring, right? Then you need to know your risk tolerance level. Some of us are risk averse. Some of us are very risk seeking. You know, a risk averse person, you don't want to take any chances. You don't want to deal with, you know, the unfavorable risks in investment, in saving. So you might want to engage a consultant. You might want to engage an advisor. You might want to engage a broker, you know, to help you deal with your investment plans. But some of us are very risk seeking. We can put our money in any kinds of risk. We don't care. We don't mind losing, burning our fingers, and then we make a U-turn. So depending on your risk tolerance, you need to actually pitch your risk investment strategies. Then work out your plan to implementing your plans. Work out how you are going to implement your plans. How do you implement it? How do you want to carry out the plans that you have set for yourself? And then you need to always follow up on your plans. You need to always follow up on your plans. That is how you are able to hedge some of the risks that you have to face in financial planning, in creating wealth. Because again, economic situations are changing every day. Dollar is rising. Business are not sometimes gets frustrated. The global economic inflation, the national inflation, so many things will frustrate and will change your plans. So you need to keep up checking your plan, reviewing your plans, and then rejigging your plans whenever the needs come up. And so, like we've said, financial planning is very important in wealth creation because it enables you to be able to, you know, make provision for the future of your children, giving them the kind of education that you want them to have. If you need your child to have to attend the best of schools, you need to actually plan towards funding that educational demands. That's the standard rather of education. You know, if you want to give your children a kind of education that you know that is for the future, you know, you need to also put a lot of resources in that. Tax savings. You want to, you know, relieve yourself of tax burden, you need to plan around that, how to manage your taxes. Financial planning helps to do that. And then again, in planning for post-retirement, financial planning also helps you in doing that. Helps to know what resources, what investments you should put your money in, what kind of activities you engage in, how much should you save, how well should you be financially disciplined in order to meet up with your post-retirement plans. Again, money management is also critical. Financial planning helps you to manage your money, manage your fund. It helps you not to be careless with spending, right? Because when you have a plan in place, it helps you to be disciplined. And then you're able to put your money in resources that will give you the kind of return that helps you to achieve your future goals. And then again, financial planning is what helps you to be able to set up contingency funds to meet up with unexpected incidents, unexpected expenses, of course, in as much as you have a plan. Emergencies will come up. Some things will come that would demand that you sometimes take a shift from your plans, but then you don't need to take so much shift away from your plan if you have a proper plan in place, right? And then that's what financial planning does for you. But then, in case you're thinking, what then can I put my money in? What resources can I put my money in? What kind of investment can I put my money in? Quadros Capital has a nest of resources, investment product that you can think of. The mutual fund resources are there. The security trading resources are also there. For the mutual fund, you have the allowed fixed income fund, you have the standard fixed income fund, you have the milestone funds, you have the money market funds that you can put your money in, you have the dollar funds, which some of us today should think of, because as dollar keeps fluctuating, it might be the better time to put our money, to have our money saved in dollars and then earn our returns in foreign currencies, and then we get more returns. You have the Codros Cape for the security tradings. Then you have the direct market access, which we call the DMA, and then you have the Codros Chase. For any of these resources, you need more information, you need more enlightenment. Of course, I'm sure Codros Capital will be able to provide you with all of this detailed information. Now, how does insurance help you in wealth creation? Why should I take insurance? You have made financial plans. Yes, very valid plans, very good plans. Why then do you need to think about insurance? Insurance is a critical tool because it is a bedrock of your financial plans and your wealth creation journey. What does insurance do for you? It enables you to take the risk of you not losing the chance that comes with wealth creation. It helps you to take the risk of not losing the chance of creating wealth for yourself. It helps to be able to focus on creating the wealth that you desire without being bothered by the risk that is associated with that wealth creation objective or agenda. And that is what insurance does for you. What then is insurance? Insurance is simply saying to you, give me your risk, transfer your risks to me, and then pay me a little amount of money, just a very small amount of money, and I will take care of the burden of losses that you may suffer. You might have planned everything well, but some things can still happen. You might have tightened every loose ends, but a gap is still there in the knot that you've tied. And so insurance helps to pick up the pieces, right, that you could not manage, haven't made all your plans, and then helps to cushion the effect of the losses that you suffer. So insurance is saying, transfer your risk to me, the insurance company, and I will help you use my experience in loss management to compensate you for whatever loss that you have you might have suffered, but just pay me a little amount of money, which we call the premium. And that is what insurance does. But how does insurance work? How is it able to take care of? Look at it. Your risk is as much as £1 billion, but insurance is saying to you, just pay me 100,000. Right? How is insurance able to do that? You wonder. Is it that these guys? Is it that they are into some kind of MMM or some kind of are they Yahoo guys, or so are they Yahoo companies or something? No. This is the way we work. Insurance works in such a way that it's saying, give me your risk. I'll create a common pool. I have a nest of risk that have similar nature. So if you are giving me your risk, you have invested your money in creating wealth in estates, in building estates. You have property, you have fleet of vehicles, you have children education that you have invested money in, you have annuities that you have purchased. Insurance pulls all of this into a basket of similar risk. So a number of persons are like you, who have also property, who have also cars, who have also annuity. We put them in similar bags, and then we're able to use that largeness in number, right, to take care of the risk of few that suffer loss. Okay, so insurance creates common pool that have a large number of people with similar risk. So when each of them pay their small premiums, we put their premiums into these baskets. Well, not all of them will suffer loss at the same time. And so we're able to use the premiums contributed by everyone to pay the unfortunate few. Just remember your Esusu, remember your Ajo, remember the thrift societies, corporate societies, how it works. You all contribute your money, and few persons that suffer loss, or at intervals, individuals get their pays out of the contribution on rotational basis. That is the way insurance works. Now, how then is insurance able to help you create wealth? Don't forget, it will not just help you create your wealth, it helps you protect your wealth. So insurance performs the work of protection majorly. After you have created the wealth, you have put money in investments, you have put money in mutual funds, you have put money in dollar funds, you have gone into security trading with the aim that when you make this money, you are going to start a business. When you make this money, you are going to increase the asset of your business. When you make this money, you are going to build a house or buy an estate or buy a duplex or buy a very nice car. Well, if those are your plans, or you have the plan of, let me make this investment so that I can send my children to schools abroad, right? Insurance does the function of protecting your plans after or if at all anything fails. And again, I say, tell me someone that fails to plan, and I'll tell you someone that plans to fail. Right? So you have to plan so that you don't fail. But after you have made your plans, could there be an omission? Yeah. Yes, there could be an omission. Insurance steps in to fill that gap. So then what insurance products can you use in helping you protect your wealth? We have the motor insurance. You have your car. The risk of accident is there. Something could happen to the car. There could be a kind of a self-ignition of the car. The car could suffer any form of that. Somebody can actually even damage the car after you have spent millions of naira buying the car. Motor insurance helps you to take care of losses that you might suffer using your car, either on the road or while the car is parked on your premises. Health insurance is also there for you, right? These days, because of the pressure in our society, pollution is around us, our environment is becoming so impaired, health challenges are here and there. And you may want to avoid yourself focusing on looking for money to take care of your wealth or health. Insurance, through health insurance, you can actually get compensation for the cost of taking care of your health as much as you are willing to afford. You also have your building, you have your property. Something could happen. Fire could occur, God forbid. Somebody might be careless. Electricity these days can be, you cannot expect what happens. Anything can happen. There could be short-circuiting from somewhere else. There could be some kind of storm. There could be some flood. This year now, projections are there. Flood situations may rise and all of that. When these things happen and damage your property, what do? You have to turn to insurance. Insurance can help you preserve your money. The money you would have taken out of your fund to take care of these losses, insurance helps you to fill that gap and you're not worried about anything. Marine insurance is there for those that, of course, you are a manufacturing company, you are an importer, you have your cargo on the IC. Something can happen while the cargo is on IC. The vessel carrying the cargo might have an issue. Insurance helps you to fill that gap. Crop insurance, for those that are into SMEs, you have put your money in agri insurance activities, in agri activities. Anchor borrower scheme has given you money. Of course, all of these things can help. With crop insurance, you can actually have compensation for loss or damage to your crop. The yields that you expect might also be compensated when you have crop insurance of some types. Now, we have travel insurance as well for those who are planning retirement. You want to travel to the Bahamas, you want to travel to some islands, you want to go on tourism. While you are on tour, you can take travel insurance to protect you from mishaps, to protect you from losing your baggage, in the course of your traveling. Home insurance is also there for you to protect the content, to protect your fixtures and fittings, to protect all your assets in your home. Even your family members can also be protected with home insurance. And these are things that you have. In a nutshell, you did not think about using your personal funds, using your hard-earned investment funds to take care of your losses. Only pay a small premium to the insurance company, and these losses are taken care of for you on your behalf. Again, on the life insurance aspect, you also have things that you can do. You have the money-backed plans, right? You have insurance, life insurance plans that can help you, get some savings, and then at a later time, you're able to withdraw regularly from that savings. You also have child plans, child education endowment policies that help you to pay the school fees of your children up until whatever time that you are nominated in the policy. And then instead of you thinking of what happens if I'm no more, what happens if I'm not able to continue to pay their school fees, this policy can actually pay on your behalf. Annuity plans is there for you at retirement. While you are working now, you can keep saving towards the future. You can buy annuity plans that would guarantee you regular streams of income after retirement, when you are not earning salaries, when nobody is paying you, in addition to your pension, right? You can try to even have personal pension plans. Again, you have the unit-linked policies. These are life policies that allows you to benefit from profits that are made from your life insurance policies, right? Term assurance policies, you have taken a loan, you have taken mortgage from a bank, and then you need to secure the mortgage. And they say, get us an insurance policy so that in the event that you are not able to pay back the mortgage or the loan, something should pay. Term assurance policy is there for you. It helps you to be able to pay the outstanding balances on the loan, on the mortgage you have taken, on whatever property that has been financed for you, or that you have purchased through some form of finances. Whole life insurance is there. It's a protection policy that would help you protect your estates in the event that the unexpected death happens, right? So it protects your family from the burden of having to suffer for not having the fund to take care of some of the situations that might have been discovered after you're gone. So more money is available to the beneficiaries, after you're gone. You can protect your family from, a lot of financial burden by having whole life policy. Endowment is also there. More than being a protection policy, is also an investment policy, because death doesn't need to happen before you get your benefits on that endowment policy. You can get your benefits even after the particular period of time of that policy, matures. So these are the things that insurance can do for you. So it means you need not put your money, or put your hand rather, in the money that you have saved over time, over the years. Just back up your investment plans with an insurance policy. In fact, you can even go full throttle in focusing on insurance products to secure the future goal that you have for yourself, to create the kind of wealth that you have for yourself. And then be rest assured, insurance companies will come to the rescue when you need them. Now, why do you need insurance to create wealth? Why is insurance necessary? What is the benefit it has for you? It allows you to transfer your risk. Move your risk from you to us. Move your risk from yourself to an insurance company. It helps you to be able to pay very small equitable premium. So your premium is very small, but your risk is insured. Again, it helps to be stable. Your business stability is assured when you have insurance. You need not go into the assets of the business to take care of your losses. Insurance comes in, settles your loss, puts you back in business, helps you to achieve stability, and you can now continue to focus on your business. Stimulus to business. Of course, it helps you to stimulate your business. Why? Because you need to import your goods. Marine cargo is an important insurance for you. You you want to take a facility from a bank. Term assurance, credit life, and insurance are a requirement that you might be faced with. So it stimulates your business so that you are not in want of having to meet up with your business opportunities. Helps you to recover quickly. So again, when the unfortunate occurs, insurance comes in, compensates you. You're able to get back to business quickly. The time it is going to take you to start rallying around looking for funds, insurance fill that gap, bring you back to business quickly, and then you start to operate again. It helps you to improve efficiency. Why? Because you don't need to focus on looking for money to take care of your losses. Just focus on your business. Focus on how you can grow your business, how you can expand your business, how you can expand your wealth, and let insurance do the rest for you. Again, with insurance, your benefit is not taxed. So you automatically enjoy tax exemption. from the benefit that you earn. There are also some insurance policies that you purchase that also offers you some kind of tax exemptions. Again, your peace of mind is also assured. With insurance, you can go to rest. Let the insurance company bother on your behalf. Again, losses are prevented because insurance companies will advise you how best to take care of your risk so that the loss that you don't want do not happen, right? Then investment opportunities are also there in insurance. Like we have talked about endowment policies, annuities, unit-linked policies. These are policies that allows you to be able to engage in some investment of some sort. And also the money-back plans helps you to save, cultivate the habit of saving for the future. And again, insurance protects you against misfortune. When the misfortune should occur, insurance helps you to avoid such misfortune. And so these are things that it does for you. Of course, again, talked about cash value accumulation. When you save over time, under your life policy, you're able to build up funds that helps you to take care of future needs, education of your children in the future. The expectation of your business in terms of profits are also being taken care of as you accumulate funds. Tax advantage, you mentioned that. Estate planning, all right, is also there. So estate planning means you are able to plan for life after you, that your beneficiaries do not suffer after you're gone. It helps to be able to achieve that number 4 pillar of wealth creation, which is what? Passing your wealth along, letting your wealth live after you, right? Insurance does that for you. And then again, in business, succession planning is key to the continuity of any business. To build a sustainable business today that will outlive the owner is for the owners to have a very effective succession plan in place. Insurance does that for you. How? There's what we call the key man insurance. Don't forget that sometimes when the key man in business dies, it might cost you a lot to replace that person. It might cost you so much to replace that person. But when you have a key man insurance, the cost of you replacing that key man that leaves your business, that dies, is then transferred to the insurance company. The cost is taken care of by the insurance company, and you are able to ensure achieve smooth transition without thinking about the cost of having to acquire someone that will deliver similar service as the key man that died, right? So in business succession planning, key man insurance is very critical to helping you navigate that complexity that could occur. Now, but in doing this, you might be thinking, can I do this alone? You may not be able to do this alone. And that is why the service of an insurance broker becomes important. Codros is a group of companies that has 6 subsidiaries, one of which is what? Codros Insurance Brokers. Why do you need to entrust your insurance services towards wealth creation to Codros? Why do you need Codros in achieving your wealth creation journey? Why do you need Codros to help you protect your wealth through insurance as much as possible? One of the benefits you enjoy is what? Insurance expertise. Their expertise would help you go far. Their knowledge of the market, of the insurance market in Nigeria, their knowledge of the product that would meet your need would help you to actually navigate this journey. They will also be able to help you, achieve competitive pricing. All right. Because of their knowledge of the market, they know what price is best. What price is best and affordable for the kind of service or the kind of insurance service that you require. When you have a claim, they will also help you in putting together the documents that will help you get your claim from insurance companies. And then we're talking about ease and promptness of service. You need insurance companies to respond to you promptly. You need insurance companies to attend to your claims promptly. You might need the service of a professional intermediary, which is insurance broker, and that is what Codros Insurance Brokers will do for you. Again, as a business, you want to be focused on raising capital for your business, growing your business, keeping your business safe. Why then do you want to bother about thinking about how to arrange insurance? With Codros Insurance Brokers in place, you are sure that you can save yourself the time to be thinking about how to arrange your insurance. You can even save yourself the money, all right, that you would incur arranging your insurance yourself. Again, Quadros has access to a wider range of insurance products that you are not aware of. And with this, they can help you actually protect your future and the future of your business. Your wealth creation journey is well protected through their assistance. And then again, relationship management. There are times that there will be the go-to person between you and the insurance company. They help you manage the relationship that you have with insurance companies. They ensure that you are at peace at every point in time, and ensure that the insurance company also provides you the service that delights you at every point in time. And these are the things that you will benefit from thinking Quadros as you navigate your wealth creation and wealth protection journey. And with this, I want to believe that I've been able to put right as much as possible why you need to think about financial planning and why you need to think about insurance in navigating your wealth creation journey. It is critical. Don't lose it. Don't miss this opportunity to actually grow your wealth judiciously. At this point, I say thank you as I await questions from the house. Kate, over to you.
Thank you very much, Dale. Thank you. Thank you. This is fantastic. You've broken down financial planning, wealth creation, and linked it to insurance. Like, this is fantastic. So we're going to be taking questions now. Before we do a quick recap, you can we'll take a few. If you have any questions, you can put them in the comment section. Do we have a question? None so far. Okay, pending when we get a question, let me ask you a question, Shell. So in the realm of financial planning, how do you prioritize between different investment options and the insurance products to achieve, a balanced portfolio? So it is now technically a marriage of two industries. How do you advise that one manages that process?
All right. Thank you very much, Kate. It's important to mention that the two industries, while they are independent, they have commonalities. First, both are in the financial sector. And so it's important to understand that as you navigate your investment journey, insurance is on the side, giving you that backing. So for instance, like I mentioned, you want to invest in real estate. Most likely you would need someone to build funds for you. Most likely you want to approach someone to help you develop the funds or to make available the funds that you will need to invest in real estate. A critical requirement in that process will be insurance, because no one wants to give out funds without protecting his funds. And that is where we have said that you can think of a fire insurance policy. In fact, the provider of finance of the funds will most likely want an insurance policy that takes care of whatever amount is outstanding, the debts you are still owing. The event that something happens, loss of jobs, disability, debts, these are things that insurance comes in to do for you. And so talking about the credit insurance, credit life insurance, talking about the mortgage protection insurance, these are things that would come in to back your investments initiative, your investments activity. So the two industries, yes, independent, but they still work hand in hand to protect each other from the occurrence of eventuality. So
so thank you very much. We have a couple of questions here. One person asked about annuity. Another person asked about child education and annuity plan. So general rule of thumb, we will send, at the end of the session fully, there will be a feedback form where you can send all your questions directly and we will share a recording of the session to everyone who is registered to attend. So, Sherry, once again, can we just quickly take these two questions before we wrap up?
Okay.
How does annuity work?
Okay, how does annuity work? Annuity, it's well, I say a payment that is made to you, right? Periodically. It's a continuous payment that begins from a particular time that you have agreed with the insurance company. And this is how it works. Right now you're working, and let's say your retirement is set for the next 10 years. And then you're saying to yourself, I want a regular income after my retirement in the next 10 years. But remember, you cannot wait until 10 years to begin to save for the money you want to be earning after 10 years. And so, annuity says to you, in order for you to be able to collect that regular money is what we call the annuity. It's like pension. But for you to collect that regular money called annuity, there is an amount you need to pledge with the insurance company now. That amount will be kept with the insurance company for the next 10 years. And by that 10 years time, the insurance company now begins to pay you that annuity amount that has been agreed upon for a particular period of time or for the entire duration of life, depending on the type of annuity plan that you have purchased. But the fact remains that for annuity to work, you must have pledged an amount to an insurance company, right? Sometimes call it deposits, sometimes call it the purchase money. And from that money you have pledged the insurance company, then over time, after a particular period of time, when you must have retired, the insurance company now begins to pay you a particular amount of money. But again, you can still get annuity, not only when you are retired. There are different types of annuity. You can arrange annuity to even start paying you before you retire, right? Depending on the type of annuity you are buying. But the fact remains that for annuity to happen, you have to pledge certain sum of money or contribute certain sum of money over time before the payment of that annuity now begins. So that is annuity for you. The second one is what? Child education, right?
Yes.
Okay. Now, so for the child education, it's more of an what we call an endowment policy. And what it does is to say, today, I want my children to attend, for instance, Cambridge University. That's kind of education I want to give them. And right now, they are still in the, maybe they are even still in crèche, or they are even still in the primary school. But this is the standard of education I want them to have. That is in later years. And then I'm saying to myself, but if something happens, God forbid, if something happens to me, or if my business gets frustrated, I may not be able to actually meet up with giving them that kind of education I want them to have. So what do? I look at, in how many years' time will those children be old enough to be in Cambridge? I begin to save now. I now go to an insurance company, give my endowment policy. I'm going to be saving a certain amount of money over time, right? Or I have the full sum to keep with an insurance company once and for all, maybe by a single payment or by a series of payments. And I'm saying to the insurance company, please, if anything happens to me, by the time these children will be in Cambridge, or by the time they are still, maybe they will be in secondary school and till the time they are done with their university program in Cambridge, if anything happens to me, please, whatever money I have saved, use it to take care of their education. That money will not be used for any other thing. The insurance company is committed to ensuring that the money is used to paying their school fees until they achieve that level of education or until that amount of money is exhausted. So that is the way child education endowment works. And you can see how it protects your wealth creation journey, how it helps you to be able to give your children the right kind of education to take over your assets or your resources after you might have been gone, or after you might have been retired. So these are the things that life insurance does for you as part of helping you to create wealth.
Okay, so we have a couple of questions. I'm taking them in no particular order. Is there a guarantee for money pledged? What if the insurance company goes under, like so many we are seeing today? Somebody has asked about what insurance policy for elders can take 60, elders of 60 plus can take. And the last question about the overall size of Quadros Insurance, I will respond to that. So if you can take those two.
Okay. Now, let me answer the third question, the second question first. An elderly person can still take policies like the whole life policy, because someone that is in the 60s, of course, can still live for as long as 30 years, 40 years, and it could be shorter. So they can take whole life policy, an insurance policy that will protect them and their estate after they are gone, right? Again, at that age of 60, can they still buy anything that would give them some level of income? Yes, depending on the kind of annuity program that they decide to go for. They can even save. Why do they have to wait till 60? They can begin to save now before they become 60. Again, you want to look at the age of 60, the body is not the same again, right? Someone at the age of 60 is near retirement, and you realize that there are some ailments, there are some challenges that come with health at that age. You could have some kind of insurance that takes care of critical illness for them, right? Depending on how far the insurance company is willing to go, right, at that point in time. So there are policies you can take even at that old age, right, to be able to take care of not just yourself and also your estates. Again, in terms of the fear that if an insurance company dies today, what happens? I can categorically say to anyone in today's insurance industry that even if an insurance company dies today, your benefit is assured. Why? Because you are the regulator that ensures that whatever money is owed to you gets paid to you, even after the company is no more. And even in today's market, it is much difficult for a company to go under and die. The worst that will happen is the regulator coming in to take over, the receivership process comes in, regulator comes in to take over the management of that company, and then not for the purpose of making the company go into extinction, but to transfer that company to another that will be able to acquire its assets and liabilities. And then you are sure that with the new company, you can still come back and make your claim at any point in time. So the fear of a company going down, the fear of a company not existing, the fear of you losing your benefits or your contributions after a company is no more does not exist in today's market at the level of regulation, governance that the market is in right now. So there is a confidence in the markets at this point in time.
Fantastic. Thank you very much, Sharon. So to Dr. Francis, the overall size of Quadros Insurance Company as regards policyholders, we have over, I think, give or take 400 corporate and retail clients and growing. Our capacity is quite extensive in the classes of business that we offer. So first of all, I would like to thank Mr. Yilleri. Okay, I'll just take this last question. Does Quadros offer insurance products directly, or is Quadros an insurance broker? Yes, we are insurance brokers. Now, as Mr. Yilleri has explained, insurance brokers are like mediators. So we are the lawyers of the insurance industry. So for example, you want car insurance or life insurance, you would speak to your broker. The broker will approach the insurance market and give you competitive rates for that policy. So there is a difference. If you want more information, please just fill the feedback form. Sheon, thank you very, very much. I just want to do a quick summary of what Sheon has said so we don't forget. He mentioned a couple of key things. First of all, the goal is to be wealthy. And building wealth starts with a financial plan, which means you have to identify your goals and plan how you can accomplish them. There you have to take into consideration your financial structure, your taxes, your expenses, how you save, your income, the number of years you want to use to save that money, and the goal for it, whether it is your children's fees, whether it is, succession planning for your business. He also, spoke about he gave a basic introduction and overview of the insurance industry itself. And he mentioned how insurance protects your people, your assets, and your liability exposures. This is done via general insurance policies such as fire, auto insurance, health, travel insurance for those of you who want to go on holiday, money insurance for those of you who do have cash in transit or goods in transit, and life insurance, which can help you plan for the future, especially, in the event of death, or, an annuity plan, like you mentioned before. He did talk about the benefits of life insurance policies, how they help you accumulate cash, the advantages in terms of tax and succession planning. So as we conclude this seminar, I want to say a big thank you to everyone who has joined. There is a feedback form which will be displayed on the screen. Sheryl, can we take this, Mr. Thomas? He's the only person raising his hand. Can we allow that?
All right, that's fine.
So, Mr. Thomas, unmute. Thomas OF.
Yeah, thank you very much, Sheon. I just want to appreciate your efforts in sensitizing the public about their financial planning, and especially looking at insurance as one of the financial intermediary tools that can be deployed in planning, in financial planning. I am the Commissioner for Insurance, and I want to sincerely thank you for this laudable job that you are doing. And I looked at the attendance, the participation at this close to 80 people. This is quite commendable, and just to thank you for the good job that you are doing.
Thank you, sir.
All right.
Thank you very much, sir. Thank you, my
Okay.
CFO.
Thanks.
Very much, Mr. Thomas. As you can see in the comment section, there is a link for feedback. Please click there. And if you have any questions, we will address them via that section. If you have any questions or anything that, Sheryl, please, can you stop sharing your screen?
Okay, okay, thanks. Let me just do that. Okay.
Thank you. Don't put off your camera though. We still want to see your face, okay?
It's all right, that's fine.
Okay, so we hope you found these insights shared by Sheryl insightful. And, we hope you have learned a couple of things that you can apply to your life. Remember that knowledge gained here is a powerful tool. We encourage you to implement these strategies. We want you to stay connected to us. You can scan the QR code on the screen to get more information and to share your feedback. Our email addresses are here, our phone numbers are here. You can screenshot the screen if you want. We will share the information once the feedback form goes out. You will get either the slides or the recording of the meeting. Joy, does that answer your question? So basically, as we part ways, we want you to stay connected to us on social media. Our Instagram and Facebook handles are on the screen. From time to time, we do share a lot of information regarding investments, asset management, insurance, trusteeships, and registrars. We are a beehive of information on financial services. With that being said, I want to say thank you to everybody. If you have any more questions, please get in touch via the screen and click the link to get more information. Thank you very much. Have a pleasant evening.
Thank you very much.
All right. Thank
Thanks
you.
for having me, Kate.
Okay.
Thank you very much.
Thank you very much.